CEO Alex Karp is dumping shares again. He's selling more than $300 million worth of Palantir. Is this even legal? What's the reason for him to do this? Palantir might be in trouble and top management is panicking. Some are even saying that this is another attempt at manipulating Palantir's price. But there could be a good reason for this. Even media critics are now saying the complete opposite as what they did. What is actually happening? Well, let me explain. Disclaimer. As you may already know, stock critics have been saying a lot of negative things about Palantir for quite some time now. They've been known to attack Palantir and discourage their investors. But today, things have changed. They are now saying something different. Jim Cramer recently expressed confusion about the short position on Palantir. He doesn't understand why people still seem to want Palantir to go down. He argued that the company is well managed and reasonably priced. Cramer thinks that some concerns may come from Palantir's involvement in the oil and gas sector, but all of this could just be minor. Despite this, he believes Palantir is a good buying opportunity right now, and this is just the beginning. The change in his statement is crazy, since he used to think Palantir is a cult stock. Now, Cramer says that Palantir stands out because of its strong position in data analytics. Its platforms like Foundry and Gotham are known for their advanced data integration capabilities. These platforms help governments and businesses make smarter, data-driven decisions. This has built Palantir's reputation as a leader in the field. And here's why that's interesting. In recent years, Palantir has focused on expanding its business beyond government contracts. The company is now growing rapidly in the commercial sector. And here's what's exciting. This diversification strengthens its revenue streams and sets it up for future growth. Palantir is also investing heavily in artificial intelligence and machine learning tools. These innovations give the company a competitive edge in a fast-evolving market. And this doesn't end here. Recent wins in healthcare and defense contracts highlight Palantir's growing influence. These partnerships reinforce the company's image as a reliable partner in different industries. With such strong support, Palantir's future looks promising. No wonder critics are now saying positive things about Palantir. In the past, many were skeptical about its high valuation or its reliance on government deals. But now, Palantir shows consistent growth and success in different areas. These doubters are changing their tune. This shift in opinion could be a positive sign for the company. When public sentiment changes, it can boost confidence in the stock. If investors and analysts start seeing Palantir more favorably, it could attract more buyers. The more support Palantir gains from respected voices, the better its chances for continued success in the market. But despite all these good things about Palantir, their top management could be thinking differently. CEO Alex Karp just sold another $325 million worth of his own shares in Palantir, and people are now starting to panic. There could be a basis for their fear, but this will only affect those who aren't that knowledgeable when it comes to stocks. Why is this so? First, let's find out why CEO Alex Karp is selling his shares. This week, he sold more than $325 million worth of the company's stock. But here's what you need to remember. It seems that this sale was made under a predetermined trading plan. These types of predetermined trading plans allow executives like Karp to sell company stock at set intervals. Meaning, this was decided months prior to the sale. This plan is put in place before any insider information is known. So, what's the point of these? It helps prevent concerns about insider trading. Once the plan is set, the executive can't change it based on any new information about the company. This ensures the sale is fair and transparent. For the company, using these plans helps avoid suspicion around stock sales. If people saw a sudden sale of stock by a CEO, they might think something is wrong with the company. And that's what's happening now. But since the sale happened through a predetermined plan, it shows that it was scheduled long before. This will keep investors calm and maintain trust in the company, especially the smart ones. For the management, it provides flexibility. Executives can sell some of their stock without worrying about how it might look or if it breaks any rules. This plan gives them the opportunity to sell at regular intervals, which can be helpful for personal financial planning. After all, they also need to protect their assets, but without damaging the company's reputation. For investors, knowing that these types of plans are in place provides confidence. They can see that stock sales are part of a larger, well-thought-out strategy. It shows that the company's leaders are committed to transparency. Who doesn't like transparent executives, right? Investors are less likely to panic if they know that a big stock sale was planned well in advance. Overall, these plans help the company avoid bad press, give management flexibility, and keep investors confident. They create a predictable, fair environment for stock sales, which is good for everyone involved. But there's still one major concern from investors, and they could be right about this. There's a chance that Palantir's stock might become diluted, all because there's so much available stock floating now. But here's what's interesting. This recent selling would only amount to less than 1% of the stock's float or available stocks. Given Palantir's large market cap of over $81 billion, a sale of this size is unlikely to cause major dilution or immediate downward pressure on the stock price. However, you still need to be very cautious. Insider selling can sometimes make investors fearful, even if it is routine profit-taking. This sale doesn't necessarily signal trouble for Palantir. It may simply be a planned sale, with no connection to the company's overall health. Still, it's something investors will keep an eye on. If the sale goes through, the market's reaction will be important to watch, especially as Palantir was recently added to the S&P 500. Being included in the S&P 500 often brings more interest from institutional investors. This can help support the stock price. Investors will be interested in seeing if this sale has any real impact, or if Palantir's momentum will continue. The company's strong position and recent developments suggest that the market reaction could be mild, but time will tell. So in totality, this sale wasn't done because Alex Karp is just leaving his shares behind. It's a totally legal and necessary procedure to protect the company and its investors. And for those who already knew about this, they've spotted this opportunity to even grab more shares of Palantir. As a matter of fact, another huge fund has bought fresh shares of Palantir. Lake Street Advisors Group, LLC, a $2 billion fund, has just started a new position in Palantir. They purchased almost 25,000 shares. At the current stock price of around $36, this investment is worth approximately $900,000. This is such a bold move from this fund. After all, people are now saying that Palantir is already at its peak, and we all know how dangerous it is to buy a tech stock at its peak. But this new position is a positive sign for Palantir. It shows that even smaller, high-quality funds are starting to pay attention to the company. When funds like Lake Street Advisors buy into Palantir, it can increase confidence among other investors. With more funds and investment banks now looking at Palantir, it shows that the company is gaining traction in the financial world. This growing interest can lead to even more investments, helping to stabilize or push the stock price higher. As more institutional investors jump in, Palantir may see stronger support from the market. This new position from Lake Street Advisors could be a sign of more investments to come, boosting Palantir's growth and market presence. And to add to that, Palantir is also now continually winning despite the market lagging behind. Let's look at the important numbers. Looking at the past month, Palantir's stock has risen by an impressive almost 12%. This outpaces the business services sector, which saw a little over 6% gain, and even the S&P 500's smaller rise of just over 1%. What stands out here is that, even though the broader market is lagging, Palantir continues to perform strongly. This highlights the company's resilience and growing appeal to investors. While other stocks may be fluctuating with the market, Palantir is showing consistent strength. This could be a sign of confidence in the company's future and its ability to weather broader market trends. So what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.